Okay, guys, today we have on John Wang from Kalshi. Fairly well known for, I knew him originally for, being sort of like Kalshi's first, I think, attempt to move into the more crypto native side of things. I don't know if that's maybe you would disagree with that, John, but John, welcome. Give me a little bit of your background, and then what do you do for Kalshi now?
Of course, I've spent my entire career so far in crypto. Ever since like high school, just trading crypto in the 2017 bubble to dropping out of college to work on crypto, start my own project, trade, invest, also tweet a lot. I joined Kalshi to, similarly bridge us into the crypto world and grow our crypto business. We had crypto markets before I joined, and obviously we have our perpetuals exchange now, but that was also in the works before I joined the company. But I was very, very bullish on prediction markets growing and perpetuals, and I'd always thought that taking a regulated approach would be sort of the next era of crypto. I mean, a lot of the biggest businesses in crypto are like Coinbase, Circle, Kraken, and such like that. They're all regulated exchanges, and I felt like Kalshi had a similar philosophy, but with the kind of velocity, product velocity, engineering velocity that a lot of these other regulated exchanges or businesses might not have as much. And so that was really the perfect mix of my skills and then Kalshi fit. So nowadays, what I work on is we have our crypto prediction markets business, which is the second largest category for the exchange behind sports. We do billions volume a month, and so growing that, looking at optimizing the market structure and liquidity for that. And then we recently launched the first regulated Perps exchange, and so also focused on growing that a lot, starting with crypto perpetuals, but also expanding to non-crypto perpetuals as well.
Yeah. Okay. Wait. Can you differentiate for a second when you say Kalshi's crypto business? So, I think maybe, and also you can explain how you think about this at a personal level. There's a difference between what we think of more as using crypto as the rails, like deposits, or in the case of other prediction markets, right, actually using a blockchain in the background in some capacity, versus when you talk about crypto prediction markets, what you're talking about is for example, the price of Bitcoin in 15-minute spans, or being able to make trades based on price movements, or maybe another example would be, will a protocol have an airdrop? Just one, maybe differentiate it too, but how do you think about this differently? In terms of using crypto to the extent that you allow stable coin deposits, or going forward, you expect to integrate more, crypto rails, versus the ability to use Kalshi as a medium to speculate on crypto prices, but not really have anything to do with crypto per se in the background.
Yeah, then that's totally a fair distinction. I think a lot of people bring it up. The largest businesses in the world in crypto, I would say, are Binance, Coinbase, Bybit, OKX, etc. They're all the largest crypto businesses. They're all centralized exchanges. They live off chain.
Yeah.
There are ways for people to speculate or trade or hedge the price of crypto. And similarly, our crypto business is functionally like an exchange, right? It's an exchange for people to trade. And then we also actually, deposits and withdrawals are actually a large part of our business, specifically crypto deposits and withdrawals. A lot of power users, even sports power users, they like using crypto. It's an easier way for them to move money around. And then internationally, it's the easiest way for us to move fiat around and accept money from random sort of foreign countries. And so crypto is the only deposit method we have. We're available to 140 countries. It's the only deposit method we have for international countries outside the US. But your point, we are not an on-chain company. I would say we are a crypto company, but not an on-chain company. And we've had some on-chain efforts. It's not a philosophical thing for us. It's more like a regulatory thing whereby we have to comply with regulations, and regulations are simply not at the level of allowing for on-chain yet, at least for what we're trying to do. And so Obviously, Base, Robinhood Chain, Solana, these are all like on-chain businesses. Pump Fund, they're all on-chain. But I would not say that we're not a crypto business because, as I said, the largest crypto businesses are not on-chain.
Yeah. Oh, well, also just for, I wasn't necessarily implying that you're not a crypto business. I was just for the audience, maybe distinguishing the difference between, thinking of like a prediction market sitting atop a blockchain in some capacity versus the ability to, you like trade crypto assets, perps, or price movements, whatever it may be, that are inherently crypto assets themselves. So I was just like, because that was one thing when you said originally that you kind of came in through crypto first and foremost. Like I was just kind of pointing that. With regards to like what excited you, so we can talk about perps, and it sounds like you have a background in trading and just came up through the crypto trends like the rest of us. What excited you about prediction markets specifically? Like, did you see something unique in prediction markets that, right, like they were showing evidence of product market fit, but like what excited you? Was it like the ability to trade outcomes in a way that was never possible before? Was it like, new, I don't know, insurance, like whatever some of the kind of the stuff, bringing information to the forefront that may otherwise, not have like deep liquid markets? Like, was there something specific about prediction markets that got you excited? And again, I know you're working on a lot of the perp stuff now, which we'll talk about. But yeah, like what about prediction markets really got you, I don't know, keen to work with Kalshi?
Yeah, like I think I was like, honestly, I was a user of prediction markets, like sort of trading Augur or like using it even just like casually back in the 2018 or whatever cycle, or Poly as well, like in the 2021 cycle, and then Kalshi, I think really came to forefront for me like during the like lead up to the 2024 election. But a lot of people talk about like the truth machine and stuff, and I think that's like a very clear narrative. For me, what attracted was like I was a user of these exchanges, and I was trading on them, and it just felt like it was like a way that made my life more engaging. Like I was trading mention markets on like what Trump would say the State of the Union address, and I ended up doing a ton of research about like what his like policy stances at the time were, and like the types of speeches that he'd made recently, and sort of pattern match against like leaked transcripts and stuff. And I was just kind of astounded by like how much more engaged I was with this like new sort of like financial product that encourages people to go out and do research and find out uncover bits of information that are maybe more like decentralized or disaggregated across the internet, and just like aggregate them and profit off of correcting prices. So that was actually the part that drew me, and perpetuals I was also quite interested in at the time. So there was like those two trends, and I felt like Kalshi kind of had like this unique wedge of as I said, like not only just being regulated, which is a lot of like operational work, not just kind of getting a license, but also like being able to move very fast from like an engineering and product standpoint.
Yeah, that makes sense. So like I hear this a lot. So like, and I think this will be the basis of a lot of our conversation. But it does seem that Kalshi is regulated, but it also, that is a big part of your marketing push. And I think that, well, I'll let you kind of like take this any direction you want, but that has seemed to me, especially as of late, to be like a consistent selling point. And I suspect, well, I think there's a host of reasons. One is because I think that, at least in theory, engenders like some user confidence, and it should, I suppose. But I think Kalshi must really think that engenders user confidence, that this is regulated in the United States under our, understanding of the rule of law. And so, you have some guarantees using Kalshi that you might not elsewhere. So for me, right, like coming from crypto, and I assume you, at least earlier on, perhaps your opinions changed, but I'm very used to using unregulated or like a murky version of regulated markets to begin with. So it doesn't like resonate with me as much. I can understand, conversely, that if I was, I don't know, allocating my 401k or something, yeah, like the idea of something that comes under, U.S. regulation and conforms to U.S. laws is like an appealing selling point. But like, what is it specifically about this like idea of, regular? First of all, what does this mean in practice? Like, what in various ways? What does this mean? And then two, like, what is it that I think Kalshi's found some, I don't know if you guys use like marketer, like testing the, focus groups. Like, this seems to be something that you really hit on. So like, maybe, I don't know. Yeah, go ahead. Sell me on the regulated aspect, and then also explain like what this means across, like this vertical perhaps.
I can't speak for the rest of the company, but at least my interpretation of it is that Kalshi is a regulated company, but we're not like, like a boomer regulated company in the sense that we're not like trying to innovate and such like that. We are actually kind of like we actively work with regulators to shape regulation. We obviously legalize prediction markets in the US. We help legalize perpetuals in the US. So a lot of our work is actually kind of like, form fitting and trying to push our products to an extent where it's like it fits the regulatory environment. We also advise regulators on how to change rules to fit the modern day better. And it's like a very collaborative process, but I'd say it's definitely like a more activist approach as opposed to like a purely passive approach. And secondarily, I think it does engender user confidence beyond like the early adopters of like the crypto natives, which we're all used to. I think if you want to get to the marginal user, the larger pool, which, the TAM is quite large. If you think about the amount of people trading on chain versus the amount of people that really are like in the world, in America, that are like actively, trading or doing things with their finance or could be onboarded, it's a very big delta. And it does matter to a lot to these guys. And some of the regulations are almost like, it seems absurd that this is like a rule, but sometimes they actually make a lot of sense as well. For example, in prediction markets in particular, like insider trading is definitely like a risk that is, it's a risk across all types of markets, including the stock market, but in prediction markets in particular, event-based insider trading, I think it's something that happens. And being able to like KYC your customers and have actual rules around this, it helps the market structure in general, because the reason why insider trading is banned, it's not just like a moral or sort of ethical thing. It's actually like a market structure thing, whereby if you have a ton of toxic flow, there won't be people that want to provide liquidity. The markets won't be able to scale, and you won't be able to achieve like the end goal that we wanted, which is to have like markets for truth, or just like larger liquid financial markets. And so that's the line that we've taken. Like, we are primarily an exchange. We are primarily here to facilitate people to trade on liquid markets. And I think the regulations are there to help us. They're sort of like rules that have been iterated over decades and have been form fit to like what consumers want and what protects consumers. And I think that's like the most scalable model if we really want to reach the TAM that we want to grow into.
Yeah. I want to ask you something, and I know I'll qualify this for you, that you don't necessarily speak for the entire company, and you can answer this however you want. But just as a sort of broad, sweeping question, why do you think that prediction markets are very controversial? Like, what is your personal opinion as to why this is the case? Obviously, I have like my reasons and suspicions, but I'm curious, like, if now I have somebody from Kalshi on here, why do you think that prediction markets are especially, or at least seemingly, very controversial right now?
I think ultimately, like any new financial market is quite controversial. Like, if you look at grain futures or like pork bellies, which is kind of the basis of commodities markets, or like the CFTC and CME back in the 1900s, like those were also seen as like gambling. Like stocks were seen as gambling, betting. I think any sort of like new nascent market needs some like speculative activity to create it. And there are also a lot of incumbent powers, I would say, like for example, casinos, who do like drive a lot of the like anti-prediction market campaigns. It's when you like kind of look at things behind the curtain, it's actually quite obvious sometimes when something is kind of like a paid campaign that actually does affect the algorithms a lot. It does come up in people's faces, and there's just like a lot of incumbents that are quite I would say defensive about protecting their monopolies, right? If you saw like the sports betting companies, their stocks dropped significantly after Kalshi started growing. Same with even some other derivatives exchanges recently. When we announced perpetuals, they're quite defensive, and so there are a lot of just like incumbent interests that are against a new market structure that is more fair, more cheap, and just like better for the consumer. So I think that's part of the reason why as well.
Yeah, I think that is obviously true, and we can see this on like some of the discussions, at least the public discussions on I don't know, Twitter, for example, which may be a microcosm of this issue as a whole, but I do see that. I think that there's an interesting, I'm not to give a counter, not to dispel your argument, because I find myself probably fairly neutral as a whole. I'm thinking as to whether or not that's true. Well, in any case, I think that one thing that is a valid argument is that mostly states have controlled at least gambling specifically. And like maybe the better way to frame this now is like, okay, well, what is gambling versus, speculation? And these lines are so blurred, and that's fair. But with regards to the federal government allowing, certain new forms of, well, in this case, we can call them financial markets, and they may be financial markets, but they also very much step into what I would like have obviously previously considered, the domain of, I don't know, casinos and sports books and so on and so forth. So I think it is at least reasonable for like incumbents can want to protect their monopolies, and then also there be like some valid point behind that. So I don't know where do you, I mean, again, I'm not asking you to speak necessarily for Kalshi as a whole, but like, where do you think that, I don't know, maybe, do you have any thoughts on that point specifically? And then like the sports aspect, I think is what is obviously like, one, it's a large amount of volume for all prediction markets. So that right there is like a reason for, it to kind of raise eyebrows perhaps. But yeah, do you have thoughts on prediction markets going forward with regards to sports versus outcomes versus, the source of truth, which may be true, but also like a small portion of at least what's going on now? Like, where do you think this kind of settles? So you can like go anywhere you want with that. I don't know, that ramble.
Yeah, no, I think totally valid, like observations there. And I think, like really in the turn of the 2020s, we've seen just like this merging of the crypto world, like even just like philosophically crypto, which is like a financial, like a greater financial, like seeping financialization of our lives. And for good or for bad, or I think like there are certain areas where there are certainly positive externalities. Some where it's like, I feel like, I mean, maybe meme coins where it's not very super clear if there are externalities that are great. But at least with prediction markets, I see a lot of like the difference between like it and sports books is any market is mostly speculative. Like Forex is 99% volume is driven by speculators. But there is like that like fundamental pin of people that are actually using this for like legitimate economic purposes. And we've actually started seeing a lot of that type of activity even happen in our sports markets. Definitely happen in like our other markets, such as like politics markets or crypto markets. We've had people execute block trades on the Clarity Act. We've had people hedge against policies being passed. But even in sports, I think this year we've seen kind of like how big of an economic impact sports has had. At least as a New Yorker, like the Knicks winning the World Cup, these are like landmark events that really are like influencing the economy by like orders of billions of dollars in activity. And we have like a hedging team that has been working with like a lot of restaurants, bars, small businesses, even ice cream shops to do like weather hedges related to these things. And so, look, yeah, I think the markets, prediction markets are still in they're big, but they're still in their nascency. These things kind of take time, and speculators help bootstrap liquidity in any sort of new market. I think like a similar thing with perpetuals, right? Like when Hyperliquid first got started out, like it was trading perps on Friendtech keys or the Friendtech as like an index. Now they're doing like perps on oil or SK Hynix and such like that. But those are obviously very different things. And so I think we'd like to get to a state where we have a lot of use cases outside of sports that we are like proving out right now, and they are growing. The rest of the exchange is growing. Crypto has actually been like the largest success case for us in the first half of the year, probably around like 2% of exchange volume or like 4% of exchange volume at the start of the year. And now it's around like 20 to 25%. Yeah.
What markets are you most excited about? Like in 5-10 years, what are you excited to see traded on Kalshi that is something that is innovative? I mean, like for example, recent discussions about, I don't know, compute or like compute. These types of, I don't know, new financial products being created that, well, maybe otherwise would not have been. Like give me an outlook such that, in 10 years, if it's not all sports, we're happy for some reason or another.
Totally. Well, commodities, I think, is like a similar thing to crypto. We've been pushing that. But as you said, like compute is an entirely new sector, which is kind of like oil or electricity in its early days. The spot market is so huge right now, but it's all like kind of in like dark markets rather than like a lit exchange. And we've been working with like our index provider Orn on that. And obviously we're the only regulated US perps exchange. So, maybe we'll see some asset expansion there. But yeah, on the compute side, I think really cool. We're able to create the first forward curve for compute, which is essentially like allows you to look at what the market's expectation for the future price of compute to be as like a spectrum of time. And you can kind of uncover these very interesting insights, which is on Twitter, you might see very like qualitative narratives about, oh, compute is so scarce and expensive, and it's going to be this way for a while. It's like a very vague statement. But if you go to our like forward curve page, you can really see like it's a very steep steep backwardation, which just means like right now the price of compute is like super expensive, but the market actually expects like the supply demand dynamics to like ease a lot more around like October. And so it just shows that this is for like the new H200, H100 chips, I believe. Or
I was gonna ask you about that.
Chips.
Yeah, like I haven't really done I don't know, I'm not so knowledgeable about this. What is the premise behind compute markets insofar as like is it fungible? Is it all on the same machine? Is it the same like energy? How do you standardize this? Like what is the thought process there?
Well, the good answer, the great answer is we work with like an index provider Orn that like helps standardize it, and that's a big part of the problem, which is essentially like finding standards, but they work with like hundreds of neo clouds and like supply and demand sort of like nodes in their network that like quote prices and they scrape data from, and they're able to distill it. Like each the thing is, as you said, like each index provider does have a different methodology, and this is like, by the way, not just sort of unique to compute. Like in the New York Stock Exchange, I saw this like TikTok where for them to get like a standardized price for like coffee beans or coffee, they have like a team of people like in the New York Stock Exchange, like in their basement or something, who sit there and drink like coffee all day, and there's like coffee experts that can tell like if something meets like a certain standard. And so there's all wacky ways of standardizing something, and it's like it's a problem across all types of spot markets, not just necessarily compute. But I expect it to be like grow. I think projections right now are like 10x, by the end of the decade. And right now it's already like around 700 billion of compute expenses per year by just like the sort of Mag 5 or Mag 7. But yeah, we're hiring roles for each of these kind of like sectors to go to market. Compute is one of them. I think we recently also announced like biotech as like the second. But that's the interesting thing about prediction markets is like the scope is so wide and each niche is so deep that we can really go deep in every area and like make sort of these bets in all these different sectors.
Let me take a moment to talk to you about Ellipsis Labs, a team I've known for a while. The Ellipsis team is one of the few that I can consistently point to and say, these guys really know what they're doing. Ellipsis Labs brought capital-efficient order books to Solana and started the Prop AMM revolution with SolFi. Altogether, they've saved retail traders tens of millions of dollars by reducing slippage on spot markets. They're bringing the same level of expertise to perpetuals with Phoenix, which is live today. Ellipsis Labs is backed by Paradigm, Electric Capital, and Han Ventures. I would consider them the foremost experts in crypto market microstructure. The best part is that Ellipsis Labs is hiring for New York-based engineers. Work with a small, focused team who are results-driven, collaborative, and use a modern stack. If you're an engineer looking to work with a DeFi team that's already proven itself in the market, go to ellipsislabs.xyz/careers. Yeah, how do you view? This is kind of like one of these questions where I'm going to ask, how do you imagine competing versus, all of these large financial institutions and exchanges when it's one of these, I don't want to preface this by saying like, how do you expect to compete? Like assuming like Amazon just going to take over everything, right? Or like have a similar mindset. But I do wonder, I know you guys have like mentioned a lot of partnerships and stuff as of late. Where do you see Kalshi, like with Perps, for example? You guys just launched Perps as of late, and we can talk more about that in a bit. But where do you see Kalshi winning in Perps versus all of the other competitors out there? Like, what separates, moving into new verticals, becoming this like everything exchange where, NYSE and CME and NASDAQ, all of these large incumbents can't? Like, I think one good answer that's I can give for you is like having retail distribution, maybe first from sports betting, but then as just like people having money on somewhere. That is a valid, like, I think that's a very valid answer. But in terms of execution, and, I know you like, I forget, sorry, I should know this, but you partnered with somebody recently to kind of like provide their, it was like a large financial institution to do prediction markets. But like, where do you see this kind of like playing out in the future in terms of like the market share that Kalshi takes and like where you guys dominate in terms of, like prediction markets specifically, Perps, are you going to be able to supplant spot equity volume? Like, there's obviously, as these things become like more intertwined, it's just, I do wonder, where do you see this going forward? Like, where does Kalshi like want to focus versus where do they, maybe cede ground to an incumbent like in the traditional financial system?
Totally. And I think you have the like comparatives correct. Like our, at least in the US, like our target base is kind of that like US retail and US institution. And if you look at the competitors in the space, like CME, NASDAQ, New York Stock Exchange, they're at the exchange level. And then on the front end like level that owns like the user, like Robinhood or like Moomoo, Tasty Trade, IBKR, Kalshi's in a unique position because we're both. And I think we actually have like a unique segment of retail or like investor that even say like Robinhood IBKR does not have, that are like actually like open to experimenting with new financial products. And so I think that's a differentiating fact, just like our distribution. I mean, the team is just so lean compared to these other incumbents. Like these other exchanges are like thousands of people, and we have a team of around like 160. And then like obviously the perpetuals team is a smaller subset of that. So we're able to move much faster, and I think it's like even shown against like because we're also like a consumer brand, right? Like in the World Cup, we were, I think, like our ads kind of rated like 70 times higher engagement than like the average compared to like Adidas, Coke, Nike, and stuff like that. And so I think we're just like quite well positioned to take both the institutional arm and also like the retail facing arm. It's going to be a very steep hill to climb though, because obviously these guys have like existing distribution with the more sophisticated institutions. Although that's like something we've been actively working on. We have a lot of like the largest hedge funds and or like market makers on the platform. We have a lot of the sort of institutional infrastructure that a lot of these institutions need in their workflows, like FCMs or like order management systems, tools that plug into the exchange that like wouldn't be able to actually plug into like an on-chain sort of perps exchange or like an offshore perps exchange. So that's like a unique factor. And then we are like the only perps product in the US, like on the App Store. So that lowers the barrier to entry as well for a lot of people. It's all about kind of just building the best product experience for people, and then like moving as fast as possible. Feeling like a startup at like whatever valuation we're at now.
It being regulated in the US is okay, like is an edge. How do you like contrast this to the rest of the world? Like what is Kalshi's strategy in the rest of the world, right? You have to deal with a ton of different regulators, a ton of different legal systems. What is, I don't know if this is at all your role. I mean, I assume given the like crypto angle, like you have some, outside the US facing like relationships or whatever. Like what do you view as, okay, so highly regulated and like working alongside regulators in the United States. What about elsewhere? Like what is this experience like?
Yeah, I think perps are like have been a much more mature asset class than prediction markets. It's been obviously been around in crypto for like years. So the international landscape for perps feels like a bit more like amicable or like easy to work with, get boots on the ground. We've been taking an approach whereby like we're working with the largest brokers in each country. We're going country by country, working with the regulators and the brokers to try to get prediction markets or perpetuals into the country. And for example, like in Brazil, we've been working with like XP, which is by far the largest broker. They kind of have like 98% market share. In Canada, like Wealthsimple, we've been recently signing some more deals in other like first world and third world countries. And I think that's kind of always been our differentiating factors. Like I think the crypto world is very much like almost like a passive like switch, like it's on the user to like turn on their VPN, self custody. We can kind of just like have this neutral internet infrastructure site that the world can tap into. Whereas I would say that our approach is a bit more like what would you say, like activist or like we actually have personnel going out there trying to shape the landscape rather than just like purely taking an engineering, like purist engineering approach to things. And I think that's like that lends us, I would say, it may create like a longer sales cycle. Like it does take time to get these things either legalized or like to develop relationships or deals with these incumbent brokers in all these different countries. But like if you get like an XP in Brazil, for example, like one click in one day, you get 98% of the population on board. So those are sort of big bets, big unlocks, and that's our approach internationally. But we actually are available like 140 countries through the Kalshi.com website directly. So by no means are we only relying on like third parties for distribution.
What is the demand? I actually like totally unfamiliar with this, so I'm asking this in earnest. What is the demand for prediction markets outside the United States? Is there like, are there countries that have a lot of people wanting to engage, or are there? I honestly just like have zero idea, to be honest. Like, what do people care about prediction markets outside the U.S.? Because I think mostly, maybe because like of the controversial aspect, like mostly what I hear is U.S. takes on this, and I couldn't even tell you if anybody outside of the U.S. cares, at least for the time being, about prediction markets.
Yeah, well, obviously, like Poly is supposed to be only servicing like international users. So, and they obviously have a meaningful business there. So I think there is definitely like demand for it internationally, and we also see that on our side as well. I think it's like maybe the reason why we haven't seen it grow as fast as it has in the US is because the two leading prediction market companies are like US people writing US related like topics and markets with like a strong go-to-market in like the US pop culture world. If we go country by country, like there are these like economic or like even sports-based things that are very, very much country to country. I think the World Cup was actually like an example of the world sort of like coalescing closer together into the US. And so we actually started seeing a lot more like international usage with that. But if we really want to like win internationally, I do think you need not only like a markets team that gets what markets to spin up in each country that actually like appeal to each population, but also people on the ground working with folks who are really deep in that geography and spreading through those networks.
When you have like, I actually don't even know this. When you have, I don't know, outcomes in other countries, like markets, is it tapping the same order book and liquidity as the US one? Like, is it one aggregated source, or is it on a country by country basis, like effectively creating new instances everywhere?
Yeah, currently, like we're the only prediction market that is US and international, same order book, same liquidity pool. I believe like Poly, for example, they have like Poly US and Poly International. Those are like separate liquidity pools. So it does like fragment the experience a bit for people. But for us, it's the same.
Got it. Yeah. Okay. Like sort of moving into the perps direction, but just maybe I want to go back, and I don't know if I fully asked you this question before, apart from kind of when we started, but in terms of the crypto, I mean, so your role, at least like the stated role on Twitter, is like crypto plus perps for Kalshi. It's like not a ton of information, but in terms of the crypto side, like what do you do? Like what do you do on a daily basis? Like are you working to design the perps order book, or are you doing more marketing stuff? Like just out of curiosity, so maybe I have a better line of questioning going forward, but like in terms of the crypto aspect of your role, like what does that look like in practice?
It's honestly, it's like a whole bunch of things. It's like hard for me to distill it.
Yeah.
So I can just like say a bunch of random stuff, but
perfect.
At least on the crypto prediction market side, I'm like working closely with like product engineering team to refine our product. Like we have like a markets team that lists new markets, and so I work with them to like change things, like change the strikes that people the options that they choose on specific markets, like fix bugs, create new markets that might be topical or interest, take markets that are like the Clarity Act market and like shop them around to institutions that might be interested, strike those like deals, get liquidity on the books. On the marketing side, we obviously have like a huge performance like paid ads motion, and like affiliate social media motion, and the payment side, we've been using crypto a lot for, as I said, like international payments and like power user payments. I've been working with we recently launched Kalshi Pro, and obviously like I think pro trading terminals in crypto are actually like the best in the financial industry, at least in my opinion. And so been helping a lot with like creating and iterating the Kalshi Pro product, which has both our prediction markets and perpetuals. And I guess like some of my earlier work was with a lot of like ecosystem builders who were building pro trading tunnels. So we like learned a lot from them, obviously. And then on the perpetual side, I'm like kind of similar things, like working on iterating the product, getting user feedback, like talking to large traders, getting them on the platform, like all the liquidity providers. I guess I work with this guy called ICO Beast on our team. He's also a crypto Twitter guy. Like even like small things like deciding the fee schedules, or like what asset to list and when and how to like market it, and coordinating like I don't know, messages to traders and stuff like that. It's kind of like all over the place. But TLDR is like North Star is to grow our crypto business and grow our perpetuals product.
I want to ask something just because I was thinking about while you were talking about like what markets you might list. Obviously, yeah, a whole like regulated aspect, and you guys have to, prior to listing markets, think about the implications, how perhaps, I don't know, how much of a risk they are to like insider trading or something like this. When on a personal level, just out of curiosity, like when you look at a market for something in crypto, I'm thinking prediction markets in this example. Like, how do you think about whether or not you should list something from I guess regulatory, but more just, moral or ethical, or the risk of insider trading? Like for some, I don't know, maybe like speculation on airdrop, right? Like there's some protocols or platforms that may be big enough and they may have enough, I don't know, people interested that it makes sense for you to list them. But if a protocol is very small or, is very at risk of being insider traded, just like by just like the likelihood that somebody on the team, right, is like maybe speculating on this. I'm just giving a single example, but like, how do you personally think about this? I mean, I'm sure you have to run everything by compliance, but like, just when you are, maybe pitched an idea to list some type of market in crypto specifically, like, how do you go about like thinking about, okay, well, maybe this is too risky, or there's enough people that want to, speculate on Hyperliquid season, I don't know, is it 2 or 3 now, right? Like that type of thing where there is enough widespread demand that it's probably worth to kind of like take it to the next, higher up and pitch it or whatever.
Actually, I'm curious, like if you had to do a like structure a market question around Hyperliquid season 3, like what would you say it is? Like, when does Hyperliquid announce season 3? Like by what date? I feel like that might be interesting.
Yeah, I mean, you could just do like one of the yes or no, will they do it, and then have a cutoff, right? Like, so right. That's how a lot of them are structured. But yeah, I don't know. I don't have any like inside. I don't have any like not even inside information. I'm not even following closely enough to have any idea, right? But I'm just curious. Like that is an example that everyone would know, right?
For sure. Yeah. Well, to be honest, like our product market fit so far has really been in like people trading like crypto prices. Like obviously every other exchange, it's kind of like similar to every other exchange, honestly, whereby like people want to trade. I know like the thing that people most want to trade in crypto is crypto itself. The difference being our like like our instrument, I think is unique and differentiated, in that it's like, well, it's kind of like options but packaged for retail in a way that is super accessible, and super understandable, so that you don't have to think about all these like crazy payoff functions or Greeks or whatever. But yeah, like when it comes to these more like idiosyncratic markets, for example, we do have an airdrop market. I think there's definitely, that's definitely something we consider when we're listing markets. Like, what is the manipulation risk on this? And then we flag that a lot in the product itself, so that users are like aware of it. Even if, you know, commonsensically, like you might like, it's like pretty obvious that all of these things are like have a lot of asymmetric information. Thankfully, we haven't really seen much of that happen so far on our markets, and that might be a function of just like them not being like large enough for someone to be willing to risk their reputation and career on it. Thankfully, we do have like KYC, so unlike like other exchanges where like prediction markets where you don't have KYC, like there's essentially like no risk for them to insider trade. But on our exchange, it's like the risks are real. Like we would know the identity of the person. We do have surveillance infrastructure in place that checks for anomalies. There's actually like surprisingly like more responsive than you might expect. It's almost like kind of the type of stuff you might see with the bubble mapping infrastructure you see on chain, but like a lot more sophisticated and like built for real regulated financial exchanges that also have your, you know, background information. So I think we essentially have all these like protections and guardrails in place to mitigate these types of risks. But when there are risks, we try to make the user like as aware of them as possible, so that it's, you know, fair to them, that like they know the risks going into it.
Yeah, and on that kind of, in that same vein, one of the obvious like biggest complaints about Polymarket, but also Kalshi, I know you guys have had a few run-ins with this, is the outcome, like the Oracle, and it's not exactly the same, obviously, with Polymarket as it is with Kalshi. But talk to me about how you think about improving this going forward. I think that is a pretty big risk in these more, I don't know the terminology, but vague event contracts. And I will say that there have been scenarios where, not that I'm like a big prediction markets trader, but there have been scenarios where I am, and this isn't just on Kalshi, this isn't just on Polymarket, just anytime I've used prediction markets, I have been reluctant to make a trade. In my case, it's oftentimes just more like betting, to be quite honest. But I'm reluctant to make a trade on the grounds that I don't think I understand the rules well enough in terms of how it's settled. And I think that this going forward, just because of event contracts by nature, there is oftentimes some discretion on the part of those who settle as to how they, actually turn out. And I think for a lot of prediction market traders, like if you hear all the professionals talk, this is something they bring up constantly, is like, oftentimes these things are a matter of, do you understand the rules well enough? And it's not exactly how you would hope the future looks in terms of all of the promises. I suppose the promises of like efficient markets, you really don't want that to be the biggest point of contention, right? So maybe just talk to me, like, I don't know, at a broad level, how do you look at, how outcomes are determined, and like maybe more specifically, how you can make the rules clear enough that people feel confident that when they bet on something, like when it happens, they get paid, right?
For sure. I think this problem that you described is a lot more prevalent on Poly than on us. And I think if you talk to like power users on both platforms, a lot of power users are obviously on both platforms. I think they would probably vouch for the same. And like, I think that's really just due to the hard work and efforts of our like markets team. There's a lot of stuff, infrastructure in the background, like whether it be automations or like just like discipline around how you write rules up and processes around like operational processes around how you set up edge cases and how like literally like are you on 20 like is your team covering like the market resolutions 24 hours a day 7 days a week, and our team is just like insanely on top of it compared to some of our competitors. Like we actually also have, I think, like a higher standard just due to regulatory reasons. We just have like much more in-depth rules that cover edge cases such that there is as little discretion as possible, compared to, I think, like Poly, for example. They essentially oftentimes have like a single paragraph in their like on their website, and there's not really too much beyond that. It's a lot of it's left up to interpretation. And then those who have like a different oracle design to ours, like ours is really just like an in-house team. Theirs is sort of like outsourced to a bunch of like Uma whales, essentially. And I think like I like this I don't know who it's from, but like I like this quote, like play long-term games with long-term people. And it's even true when it comes to like resolving markets. Like if you have a team that is reviewing these things all day, they know like all the precedents that are being set, then there's like this level of consistency and anti-manipulation that you might not see when there are like people playing like one-off token games, like token voting games on chain. And so it does create a more secure and trusted system. And honestly, a more efficient system. But even like when it comes to just Oracle design, I think our team has done a great job. Like, for example, in our crypto markets, one of the reasons why we were able to grow, I think we were like 5% market share in crypto prediction market trading volume. Like when I joined compared to Poly Market, now it's around like 85% Kalshi. One of the reasons why is because our market's just like our crypto prediction markets, like these sort of up, down, or like price range odds markets. Those are like much less manipulatable on Kalshi, to the extent that, so the reason being we have this like TWAP and an aggregated index of exchanges. So we TWAP over the last 60 seconds to determine the resolution price, and then we aggregate across like multiple exchanges. Whereas on Poly, it's like just Binance, and it's just the resolution price at like the second of the resolution. And so they actually lost a bunch of users and liquidity providers like came to us because of this, and kind of they bled a lot over time. And so even like these types of like small things that seem not that noticeable, like not obvious when you're just like looking at the interface. Like both have like a cool chart, but like the underlying market structure and stuff matters a lot to how these things develop. And your users know, like users that trade these all day, like they notice it.
Yeah. Okay. Well, let's finish up with like just talking a bit about the Perps offering. And is it open to everyone yet? I saw a few weeks back it was, I don't know, waitlist only maybe. And yeah, talking about like the strategy you're taking, I think it's interesting. I think we'll finally I mean, maybe through Kalshi first, I suppose, but then like just maybe over the next 6 months to a year, we're going to see if the notion that perps are just a much more intuitive, better way to express leverage for retail, and that there's going to be a lot of uptick in this. I think we'll see if this comes into fruition. I don't know. I don't know one way or another, but it'll be interesting to see like in the regulated context. Yeah, what are your thoughts on like launching perps? Also, what was the motivation there? Like, I guess prediction markets obviously being sort of a unique market design, and then perps it makes sense again, like if everyone's trying to be the everything exchange, but it is a bit of like an undertaking. So yeah, maybe just talk to me a bit about like Kalshi's Perps offering, how you see it going forward.
Yeah, of course. So it is open to the public. We have like around a dozen coins on the platform already, like available for trading. It is the first like US regulated perpetual exchange, like allowing US retail and institutions to access it. And so we've had a lot of interest from like the type of user who finds it like more convenient, accessible, and easy to use. And we also have like the Kalshi Pro Perpetuals product, which kind of is a more familiar like trading interface that looks a bit more like, you know, the Hyperliquids or Lighters of the world that there's like a terminal experience. But I think like the reason why even a lot of whales are choosing to come and trade on us is we have like quite a sophisticated risk system. Like we have a guarantee fund, for example, that stands in the way between we wouldn't have really experienced much of a crash during like 1010 compared to like a lot of the other perp exchanges in the world due to our like guarantee fund and our like risk limits. And I think we also have great like on and off ramps, which a lot of other perp exchanges might not. And it's just an easy way to trade on your mobile phone, stuff like that. Aside from that, I think the real like battle is going to begin once we launch our non-crypto perpetuals. So we recently announced or like seeking approval for gold with the CFTC, which has been in the works for a while now. It's like gold, silver, palladium. We have other like non-crypto asset classes coming as well. And I think we'll probably be able to offer like the most liquid markets on those like non-crypto perpetuals, given that we have access to this, essentially the largest capital markets economy in the world, whereby all of this liquidity for non-crypto assets sits compared to crypto assets. And so I think that's going to be really where things start heating up. And then your final question was around like why perpetuals, or like why now? And well, firstly, this has been like an undertaking for around nearly 2 years now for the company. Like we started working on the speccing, risk modeling, and like infrastructure build out around then. And so it's been working with the CFTC to get it across the line, and really just like Kalshi spearheading this charge of getting perpetuals legalized in the US. That is like ultimately a net new thing in this world, which is offering like the most powerful used crypto product globally into the US for the first time. And then like not just like this crypto product, but also like this new financial instrument way of trading things that is something more accessible to retail than like trading options or futures. And so I think it's going to be super interesting to see how it evolves. We're coming at it from the angle of wanting to really create like the next generation financial exchange, take like the newest markets such as like the frontier ones such as compute, or like the frontier financial instruments such as prediction markets and perpetuals, and then bring them to this like the average trader, and also anywhere from the average trader to the largest institutions, put everyone on an equal playing ground, and essentially like make it easier for people to have access to these very novel things that are ultimately better for the consumer. They've grown so they've found so much adoption and acceleration overseas. I've traded them a lot personally myself, obviously, and I think there's no reason why it shouldn't belong in America.
I'm curious if you've had thoughts about the direction of crypto, specifically because you come from, right, like you were in the trenches with the rest of us, I suppose. So you come from a crypto background, and you're now working at, a fairly, buttoned up. I won't necessarily call it that, but you're working at a very regulated exchange for something that found product market fit first and foremost in crypto, I would say. I mean, like you said, Augur first. There was like predicted and stuff, but I don't know how good of a. I was like, I don't really know if that ever reached enough kind of escape velocity to be considered in this conversation. But you work now at Kalshi, like I said, which like prediction markets primarily found product market fit in crypto. Now you're working on Perps, which found product market fit in crypto, and they're all kind of coming to now regulated venues. Do you think that this is a trajectory that crypto will follow in general, where something kind of reaches escape velocity and it kind of escapes crypto containment, and then it just becomes something that's regulated? Like I think about this with stable coins, for example. I don't know the future of stable coins, but like using the blockchain as the backend, it's not so obvious to me that this is going to be the case in 10, 20 years. I mean, it may be, but it's not obvious. I wonder if you, having come from crypto yourself, do you have thoughts like this just with regards to what we've done is identified the primitives, if you will, and then just brought them into a regulated setting? Like, is this mainly the future you predict, or do you have thoughts? I don't know.
Well, actually, prediction markets and perpetuals, like the origins of them were actually from like academics, like sort of research papers and stuff. And then like I think crypto was like a very cypherpunk community. They looked and scoured through all these types of like academic origins.
Yeah, exactly.
Papers
but they use the blockchain as like the infrastructure, right, to do this first. And, I mean, I guess like BitMEX, right, like perpetuals, but still, it was in the context of gambling on like crypto coins. Right.
Well, yeah, I think maybe the reason why they were able to do it was because like you essentially were able to create new financial products that without it seeking regulatory approval, which is obviously like what Polymarket and BitMEX did with prediction markets and perpetuals respectively. And then like Kalshi, like we did and could have built the product like way earlier, but it's just a matter of like bringing them under regulatory approval is like how you offer them to quote unquote like the masses, right? And so I wouldn't say it's like getting eaten up. It's really just like taking something and like legitimize, like taking something that's like obviously like worked and like legitimizing it and making it safer and easier for people to use, and or like more accessible for people to use. And then I would like philosophically speaking, I think I've actually found crypto to be a lot more useful in ways that I didn't expect after joining Kalshi. For example, like one of our largest like infrastructure challenges to solve for when we were building the perpetuals exchange was like, how do we solve for 24/7 money movement, whereby like we need to call for variation margin on the weekends from like traders and stuff. And obviously the banks are not open on the weekends. And so how do we do that? And like one of the ways that we were able to solve for this was like stable coins. And that's like quite underappreciated, I think, unless you're like actually working at a regulated financial institution, like how antiquated all of these banking systems are and how like forward crypto is. And so we were actually very willing to work with a lot of the more crypto forward banking providers and stablecoin sort of like service providers that were able to accommodate that for us. And you know, our like chief risk officer, he spent like 20 years at the CME, like heading their like post trade like risk management. And the great thing about Kalshi is I think you get this like coalition of like obviously engineers and really smart like people on the frontier of like crypto and stuff, but also you get these like people who are from traditional finance, but they're like very actually very receptive and like much more tapped into like the developments on like the stablecoin and sort of like crypto front than you might expect, whether it be like how the Clarity Act evolves or like differences between like Coinbase's offering or like Canton Network or like Customers Bank and these types of things. Like I think that was like underappreciated for me. I think crypto is still very, very like much useful there. From a trading perspective, I also think that like the SEC and the CFTC, they've expressed pretty explicit direction towards like moving securities markets and just like trading on chain and allowing for more of that. And so and ultimately that's bullish for like on chain activity. And I think even like our Kalshi's co-founders have like said this publicly, like we do expect ourselves to be on chain on like a long-term time horizon. We just move with the regulations. And so it would really would make our lives easier. Because
but like
engineering,
I'll just ask one question about that quickly. Like when you say on chain, eventually, it was like why would you go on chain? You have like a centralized like matching engine. It's like so much cleaner. I don't know why you would use like a distributed database of validators that you have to. I don't know. It seemed that aspect of it would be like moving in the wrong direction. Like if you're allowed to do it, like why would you do it on a blockchain? I mean, this is how I see it, at least.
I see,
but maybe not that part. Maybe not that part. Like okay, like sure, the rails, but I guess the idea of like decentralized matching is just like that's just a whole. I mean, that is the essence.
Yeah,
of blockchains, right, and that doesn't seem very viable. Like if you're allowed to do it. Do it. Like the reason we use all these validators is because someone somewhere will include some transaction, right? And so you kind of like have that like censorship resistance aspect, but like there's no risk of censorship really here. You might as well just use like the fastest way. I mean, I'm sure Tolly and Kyle would argue with me about this, but I don't know.
Right. Yeah. I mean, I think I somewhat agree with you. Like right now, like even Hyperliquid is their matching engine is not on chain, right? So
right, exactly.
Yeah, like a lot of these like quote unquote like on-chain exchanges, they're actually a lot of most of their infrastructure runs with off-chain dependencies. So that's probably the most pragmatic framing for now. Yeah.
Well, John, it's been fantastic. Thanks for coming on. I appreciate it.
Thanks so much.